A lot of uncertainty, whether it's the Fed chairman, Jerome Powell, providing some of that uncertainty, or maybe the president adding to that with his criticism of Powell. There's some blowback, certainly, from the departure of James Mattis at the Pentagon and how that kind of plays into decision-making in the White House. Let's bring in former Assistant Press Secretary to President Reagan and Movie Nights with Reagan author Mark Weinberg, who's here in studio. It's good to see you, Mark, and thank you for coming in today. We appreciate it. You know, the big picture, I think, for Wall Street investors, they try to look at politics, isn't necessarily, oh, the president gets rid of Mattis, let's sell stocks. It's, wait, what happened here in decision-making? Why wasn't Mattis consulted on Syria? And now, will the president not consult so-and-so on trade? It's just worrying to people, the unpredictability. Do you buy into that? What's going on?
Yes, I do. And predictability is a very valuable commodity for presidents. You don't want, if you're in a war, obviously, you want to be a little bit unpredictable. But people need to believe that the president will say the same thing on Tuesday that he said on Monday. And if he doesn't, well, then how do you know what to invest in? It's a difference between being a little unpredictable and being erratic, and that's what scares investors.
So this president right now, would be fair to say he's being erratic, or has been his entire term. Do you think something's changed in the last few weeks? Or?
Well, it's easy to play armchair psychologist. Clearly, there are a lot of problems that are mounting for him. He's always been a little bit erratic of sorts. Some people are attracted to that. I think from an economic standpoint, if you ask a CEO what they want, it's consistent, sustainable earnings growth.
Right.
And the Trump policies are neither consistent nor sustainable. So that would give pause to investors. Especially
the policies, I think, at least what we've been hearing from investors and to your point, CEOs on trade. So early in the administration, the Trump administration, generally speaking, and the president in particular, were seen as, quote unquote, business friendly, cut taxes, cut regulations. But with the shift to trade, that's really hanging over everything now. I know the president wants to blame the Fed for everything, but I know these CEOs would love to see some sort of deal cut with China. Do you think we'll get one?
I hope so. I don't know. I mean, normally you would see a path there, but in this case, anything can happen. And even if it's agreed to, doesn't mean it will hold. They want to know what they can count on. They want some predictability and reliability and stability. And by the way, I know his style of governing is chaotic, but calm has a place in government, too.
Yes, it would be nice, right? We've all been joking sometimes. By the way, the Dow's now down 500 points. We've all been joking throughout this period. It's like, you know, sometimes it would be in the summer, other times it would be on holidays where you'd come in and you work in news and you say, oh, today will be a quiet day. That literally never happens anymore.
Right,
I mean, some people say, oh, it must be fun. And it obviously is interesting. But at the same time, maybe to your point, investors and others would say, let's just take a day and take a deep breath here. It almost seems to never happen. I don't know if that's the president's fault, but he's definitely playing a part in it, right?
Well, it certainly has a major responsibility. If everything were going great, he would get credit, so it's only fair to lay the blame. And I think him attacking the Fed, as he's done, which is really unprecedented, adds only to the instability and uncertainty.
Well, some people will say, Mark, that other presidents have had disagreements with Fed chairmen in the past, that Nixon had issues, and that other presidents have attacked the Fed. Some have done it behind closed doors, others have done it in public. But you think there's something different this time? Like, for example, this morning saying the only problem our economy has is the Fed.
It's not the only problem our economy has. And the threat to fire the head of the Fed, even though he realizes now he can't, certainly does not add to an atmosphere of stability here or globally.
Probably adds to uncertainty, as we just hit session lows in the market right now, because if you, I was trying to make this point earlier, if you're the Federal Reserve and you kind of recognize that the economy is slowing down, and the New York Fed president, for example, last week started to say, you know, we're flexible on this. So, yeah, we have 2 rate hikes planned for next year, but we might not do it. Now you see the president hammering the Fed, and it almost seems to me puts pressure on the Fed to stay aggressive, even if they shouldn't be. I know they're supposed to be apolitical, but it's tough, right?
But it's a human reaction. It's a normal human thing. And the reason the Fed is independent is a good one. And the president can jawbone if he wants, but at some point he has to understand that his messaging has a very negative effect on the market.
Right. Now, the Treasury Secretary also made these calls to the bank CEOs over the weekend and was convening the president's working group on the markets today to talk about market instability. We just had a headline off the wires from, I believe, Reuters, saying that financial regulators have told the Treasury Department they see nothing out of the ordinary in markets. which in a normal environment would be good news. But what's interesting about all of this is that not necessarily maybe that headline, but the calls over the weekend as well, is that we're seeing things that we may have seen, say, in 2008 when things were disastrous and there was a lot of instability out there in credit markets and elsewhere. And you're saying, boy, are there problems here we didn't know about? Do they know something we don't know? Now, they keep assuring us that they don't, but do you think that adds to the volatility, just saying it or making these things public?
I don't know if it's good or bad that they say they know things that we don't or don't know things that we do, but the phone calls are interesting. Clearly, they've added to an atmosphere of nervousness. The market is not down 500 points today because people have confidence.
Right.
The market is down 500 points today because people are nervous.
They don't have a reason to buy stocks. Like, why
No.
would you buy an equity? Why would you buy a share in a company today when you have no idea what's going to happen, say, a few days from now and you're heading into a holiday week, right?
If the president attacks that particular industry in 2 or 3 days, that could turn out to be a very unwise investment.
Right. So the other headline coming from Reuters is that the call between the regulators, this group I'm talking about, and the Treasury was about agency plans during the partial government shutdown. That's what Reuters is reporting through a source. So, you know, this all works into it. But when you start to see headlines that, hey, everything's okay, you start to ask yourself, well, you know, did we have a reason to think they weren't okay? And if that's playing into it, right?
Exactly right.
So, all right, Mark, good to see you. Thank you. We'll keep an eye on these markets.